Hey, what's up, good people? Welcome back to Stock Up with Larry Jones, back in Studio A. Listen, hit the like, subscribe, notification bell. I want to extend some training to you guys, okay? I'm going to provide a link beneath at the end of this video that's going to help a lot of you make money. Just that simple, okay? It's to my free community. And let's get right into it. I want to talk about some things that you need to know now. There's a reason why I'm making this video now, and it's very important that you watch this video over the weekend and beyond. Okay, so there is a saying: "Sell in May and go away," and I want to point that out exactly what that means. I'm going to show you when to buy. Even if you're not watching Stock Up with Larry Jones, I'm going to show you how we've built strong portfolios, when to buy, good stock I'm talking about, okay? When to buy and potentially when to sell, and how I built multi-million-dollar portfolios that I share with my money movers, okay? And so I'm going to provide a link to a free community where I'm going to be doing more teaching about this. Someone is going to say, Larry, just teach it here. Nope, it doesn't get any traction. I'm going to this page, I'm going to continue to talk about what's happening, some hot swing trades like I do, and I still talk about my long-term portfolios when I'm buying and selling crypto. You guys know I provide a lot of money-making tips here because I'm showing you what I'm doing. So now, just bear with me. I don't want to make this one long. Let's go right to it. So there is a saying, sell in May and go away. Let's see exactly what that means. Sell in May and go away is an old advising investors to sell their stock holdings in the spring, okay? Don't sell, right? Based on what you're about to see. Don't sell based on what you're about to see. I want you to watch the whole thing and then you make a decision. All right. In the spring to avoid historically weak period for the stock market. Okay. Historically. Right. And that just means that it happens more times than not. It does not mean it happens every time, but it does happen more times than not when it says historically. Okay. The strategy and the myth. Okay. The theory. The saying suggests that the stocks tend to perform significantly worse during the summer months. All right. That's why I was saying look at your portfolios, go to every individual stock, see what you need to hold, see what you need to take a haircut on. And there is something called sell into strength. Okay. That means that you don't care if it's going to go higher. You sell when you pop. And that doesn't mean sell all your stock. It may be selling 10%. 25%, 50, 2/3, 1/3, you get it, according to how much you're up in profit, okay? The return. Investors who sell in May usually park their money, watch this, in cash or safer interest-bearing assets. So I like cash. I hold cash. Why? Because if the market does come down, I could buy back in to some of the wonderful long-term stock or ETFs that we have been buying, okay? So now I'm going to say something that not a lot of you, but some of you, and it's really a small portion, understand. Now, watch the comment sections. Somebody's going to say, Larry, yeah, we know this. No, you know it, but 70 to 75%, I would say 80% of the people don't know it because we have a lot of people that need to learn this. And people that's been in the market for years don't know this information. So please don't ruin it for everyone else. We want to learn and earn here. Okay. So look at this. The 200-day moving average, DMA, is a premier technical indicator used to identify long-term market trends. Okay. So you guys hear me talk about the 200-day moving average. Okay. 200-day weekly moving average. You hear everybody talking about it. Okay. And it's just something that we base what we're going to do. I'm going to show you why I bought on Liberation Day. I'm going to show you why I bought on certain dips during the war, okay? And the CapEx spend scare. I'm going to show you why I bought in 2022. I'm going to show you why the bear market of 2022. I'm going to show you why I bought in COVID, because the 200-day moving average gave us a clear signal. All right. You got to look at the trends. See here, macro trends indicators. It acts as a defining line between bullish and bearish sentiment. Okay, so watch this. If an asset price is above the 200-day moving average, the long-term trend is considered bullish. Okay, if it is below the line, it signals a bearish trend. So watch this. I want you to remember these two terms: a golden cross and a death cross. They mean the polar opposite. Let me show you. The golden cross, a death cross, okay? Should I say the golden cross and a death cross? The 200-day moving average is famously used in tandem with the shorter 50-day moving average to signal major turning points, okay? So now let's go here. Let's look at what a golden cross is, and I want you to realize the name, golden. That sounds good. Death, that sounds bad. Golden, that's good. We like gold. Good. Gold is good. Death is bad. All right? A golden cross occurs when the 50-day moving average crosses above the 200-day moving average. Okay? So now I'm going to go here to Trading View. I want you to see that the 200-day moving average is yellow. So that's this yellow line. The 50-day moving average is green. Okay? That's this green line. Now let's go back. Let's look at what a golden cross is. The golden cross is when the 50-day moving average is above the 200-day moving average. So it's when the 50, which is green, is above. Okay? All right? So right here, the 50 crosses above, and this is a golden cross because the 50 crossed above. That is a bullish sign. Okay? So now, what's a bearish sign that the market is going down? That's called a death cross. It occurs when the 50-day moving average crosses beneath the 200. Warning. Okay? You guys see that, right? Let's go back. Okay? Warning of a potential bear market or, see here, prolonged downtrend. The golden is indicating a long-term bullish breakout. Okay? Now, you will notice I'm on the weekly time frame. You can go to the 2-week monthly. We like to use the 200 in tandem with the weekly time frame. So, if the green line, which is the 50, crosses beneath the 200-day moving average, that's a death cross. That means that we are going down. And you say, hey, that doesn't look long. But if you look at the bottom, this was August of 08. This was the recession. Remember? That's August of 08. It didn't cross back over until, look at that, 2 years later. So this is a 2-year period. That's when we were over. Okay? So it did work on a weekly time frame telling you it was time to get out. Just remember this. It's better when the lower number is on top. Another used number is the 20. So if the 20, remember, 20 is lower than 50, 50 is lower than 100. The smaller number should be on top. That's green. This is bearish, should I say. That's a death cross because the green line is dipping beneath. The lower number EMA is dipping beneath the higher number. That's a death cross. When the lower number is dipping above the smaller number, that's a golden cross. This is good. This is bad. Okay? Death is bad. Gold is good. Follow? Sorry, I'm just coming on this Saturday just to let you guys know this. And this is what's important. Let me show you something else as we will be teaching more of this in my free community. Okay? So let's go here. Let's go to something more current, right? Let's go to something more current. Here's what's more current. Let's just go here, and I'm going to keep my settings the same. I'm just going to move. This is over. Now, this is the NASDAQ, okay? Here's where all your tech lies, in NASDAQ. I want to show you this. This period, between this period was Liberation Day. You see what happened? The line crossed and actually touched the 200-day moving average. So this is how I knew it was time to buy in Liberation Day. And what was this period to this period? The war. And now. And so it didn't touch the 200-day moving average, but it did touch the 50-day moving average. If you're looking at this and you say, that does not look like much. Now just remember, this is the NASDAQ. If you did this with an individual stock, you will see mind-blowing numbers. From there to there, if you just bought QQQ or the NASDAQ itself, you would be up 82% from the bottom of Liberation Day to here. This is how we made a lot of money, because we understand this principle and it simply showed us when to buy. And I want to teach you this. So what I'm going to do in this video alone is I'm going to leave one link in the description. Okay, it may appear here. And that one link will be to my free Money Moves community. You don't have to pay anything. For those of you that have Money Moves, the full Money Moves, the paid Money Moves, you don't have to join. All right, you're getting this. You're going to get all of this. You get everything. But for those of you that don't, I'm going to be teaching more of this in my free community. So you're going to see a link that says Money Moves Free Community. Just come and join us, because down the road, I'm also going to teach options for everyone to make money. So this weekend, just join up, and in the coming up days, I'm going to be teaching more of this so you will know now when to buy. While the summer is going on, you learn, because what I expect is that the summer months is going to be choppy. We're going to have some lower lows, but I expect that the end of the year we wind up higher. So this will help teach you how and when to buy. Okay? I wanted to come here, Studio A, and teach you this. Share this with your friends and family, and come and join this free community. It will be the only link below. You may see it pop up here. My name is Larry Jones. This is Stock Up with Larry Jones. Live, love, laugh, and learn.